Hello, today is the 22nd of November 2011, and welcome to this week's silver analysis or technical analysis looking at the chart starting with a half-year chart. This is a candlestick chart, and a half-year means that each one of these candles represents 6 months worth of time. Thus, only two will appear in a full calendar year. Watching this chart move is very similar to watching the paint dry or watching your grass grow. Very lengthy process, and in comparison to watching a 1 minute chart where each candle changes every 60 seconds, a lot of times you can be fast. Long-term trading, not so much is the case to be needed to be going quite that fast. Now, I've talked about this long-term chart because it goes back to 1970, 1968, even before I was born. And it's been in this long sideways consolidation, really in a sideways range between $4 and $50 per ounce, which overall is quite volatile. Now, the movements have had these lows, if this is the next one, lower than each one. The high is the same thing, up to this key level of resistance. When we break through levels like this, how big of a gain would I be expecting? And normally, just by looking at the charts, not even caring what these numbers mean, not caring what these numbers mean, but just merely looking at the chart, you would expect to have a decent size breakout when it's finally ready to get going. How big would a decent size be? Well, it could be the size of going from here to here, which is like going from 15 to 50 or tripling its value. And I think the big thing to point out is when it's finally ready to get going, then this thing can really explode. But right now it's in this sideways consolidation, still has yet to come back, if it even wants to come back, to its previous former resistance level of around $21 per ounce in fiat currency. Fiat currency, if you are unaware, is currency backed by absolutely nothing. People will talk about this being a paper traded game. I don't really see that. We're well past that. We're now a computer traded game, no paper needed. Maybe check your emails to see what your portfolio looks like. In that, the system of bets. Oh yeah, it's bets on the majority of the COMEX system when they're in place as they are with what's the best way of explaining it? You got high frequency trading, the big players, if you will. If they want to bring this market way down here and they're able to do it, then that's going to happen. And a lot of panic will come in. People will be calling this a bunch of BS and all this type of stuff. I'm saying if it does happen, we'll have a major disconnect problem. And the disconnect problem refers to the physical inventory within the paper situation. Okay, now let's move on to the 9-day time frame. So instead of each candle representing 6 months worth of data, each one represents that of 9 months of data. So this trend line is obviously long gone, for now anyway. And just by looking at this, you can say, well, maybe we can come back down, because this hasn't hit as of yet. But as of the Fibonacci levels, as of the moving averages, the band in here, which was trying to find support, tried to break through, find support, and lift off, but that didn't happen, oftentimes from failed moves, can create fast moves in the opposite direction, which was the case. So now this level is handling this 18-period average as resistance, and instead of rising, it is doing that of declining. Now, the importance of this Fibonacci level has a low of $8.46 and a top of $49.82. Therefore, the significant Fibonacci level they're stating is that of 25 1/3. It's already came down to 26.10, so it's already had a pierce above that level as of now. I personally don't think it's going to break below 25. If it does for that period of time, for that long of a period of time, because a lot of times when you have the major bottom washouts, they are very, very fast. But again, I'm only guesstimating, to say the least anyway. Moving on now to the 3-day chart for the silver market again. We got the Fibonacci line from the low of 2610, which is right in here. And we have the high from that 49.81 mark, which is up towards this level in here. The big thing for this thing to get going is to finally get above the 61.8% retracement, which is currently located at 38.91. We'll even say 39 just as a good, decent, even number. On the first break from this low, it managed to come up to this first Fibonacci level, and it managed to consolidate within that level for 5-6 periods, or that of a little over a couple of weeks. And just recently it is now breaking back down below it. The significant thing when you find resistance where you're supposed to, and I use the word supposed to not like it's going to happen, but the next significant area you would expect it to happen, which was in here, as long as it makes that higher low and comes back to that level, it increases the chances of taking it out. But if this pretty much even 30 level does manage to get in, that fast move that could continue it lower to move towards a disconnect by far is definitely possible, as the big traders, of course, are the big banks. Let's now move this on to the daily chart. And within the daily chart, we have the low of 2610. But instead of a 49.81 high, we have this one in here. So more of a short-term look within the market. Stabilize within this mark. And I said before, just a few little moments ago, that as long as it makes a higher low, that it's positive. Because we found resistance with a higher low. Found resistance again with a higher low. There's a breakout. So the significant part when you break this is you want to find that higher low support at previous resistance. Well, here we are now having an extremely hard time finding support, and more than anything, it's looking like it's finding resistance at that significant level. Therefore, again, breaking down below this significant level could create very fast moves, sort of like we have seen in here. Let's now finish this off within the quarter-day chart. And each one of these represents 6 hours of time, from 12 o'clock to 6 o'clock and 6 o'clock to 12 o'clock, both Central European and Eastern Daylight Time. And within this level here, I was stating before that just because it was holding this level for quite some time didn't mean that it was ready to get going. And after it broke down below here, it was a fast move, not only to this line, but well below this line, to the point where this area here is looking like an area of resistance. Therefore, if it doesn't get above 32.5 in the next little while, we're going to continue this pattern of lower highs and lower lows. Very much has a decent sized chance of making lower moves, if you will. And this is a very, very fast market, of course. And just going back to the 3-day chart, this thing will explode at some point. And the safest way, or the easiest way to watch this thing and say, I'm ready for this when it's showing strength. I don't want to go long on any type of weakness. The big thing is always going to be the 61.8% Fibonacci from the most significant top, and it's always going to be 49.81 within this downtrend. And the most significant low, which is currently at 2610. If it goes lower, then the Fibonacci levels will change. But if it doesn't, it needs to get in this area here, above here, before you can start to see the conviction continue towards the upside. Thank you for tuning into today's video and technical analysis, and have yourself a great day. Bye-bye.